Nigeria's central bank has revealed that it will be making a raft of recommendations to the Ministry of Finance in order to help stabilize capital markets. Joining us now to discuss what some of the pervasive systemic risks are is Dr Kingsley Moghalu, Deputy Governor of the Central Bank of Nigeria. He's presented a paper earlier titled Systemic Risk and Financial Stability, an Emerging Economy Reform Agenda. Thanks so much for your time, Dr Moghalu.
Thank you very much for having me, Loretta.
All right, so apparently the CBN wants to make a few recommendations to the Finance Ministry regarding what other measures need to be taken for stabilizing the financial services. What are some of the things you have in mind?
Well, the recommendation I talked about was regarding a specific aspect of the work of the Asset Management Corporation of Nigeria, AMCON, and that regards what will befall the loans that went bad, that were given to stockbrokers, which is quite a significant amount of money. And so those are the kinds of things that we will have to make recommendations to the Ministry of Finance, since they also are part owners of AMCON, together with the Ministry at the Central Bank of Nigeria.
Before we talk in detail, I'd like to get an evaluation from you as to the successes and failures of the efforts undertaken by the CBN in the last 2 years for stabilizing the financial system. I mean, previewing the AMCON was the $4 billion bailout for distressed banks. Subsequently, it was mopping up non-performing loans through the AMCON, now mergers and acquisitions. So almost a three-tiered process. Has it worked very well?
It has worked. And broadly, stability is in place at this point, and we're trying to make sure that that stability becomes a long-term phenomenon. If you look at the work of AMCON, the Asset Management Corporation of Nigeria, it has been quite a very significant stabilizing factor in our efforts to bring stability to the Nigerian financial system. It has bought non-performing loans from the 8 intervened banks and also other banks that are healthy as well. And those purchases have been over 1.6 trillion naira. And it has made those banks now to have very clean balance sheets, and they can now resume lending. The remaining challenges remain the capitalization of those banks, and AMCON will also play a role in that, and AMCON will also play a role in debt restructuring long term. So, and then of course the mergers and acquisitions are going on. We've had a number of memoranda of understanding reached between the banks, boards of directors and management on one hand, and interested investors. We've also launched a new banking model in Nigeria, which has disaggregated risk, and we hope will continue to disaggregate risk and encourage banks to lend to the real economy. So overall, I think the steps that the Nigerian Central Bank has taken to establish financial stability in Nigeria have had quite a significant impact. Of course, the journey is not over. It's a work in progress, but we hope to be able to reach the desired results in the next few months.
Now, Dr. Moghalu, that's quite a comprehensive insight that you've provided us by way of the process. It's estimated that the cost of the entire exercise, somewhere in the region of 1.7 trillion naira. The IMF even believes the figure is much higher in dollar terms. Now, for anybody evaluating this particular situation, the question they'd be asking is, was it financially worth it? How's this economy going to recover so much of the cash injections made by the CBN and the various organs of state as part of efforts to stabilize the financial services sector?
Let me first of all clarify a few points. Now, unlike in many other countries that were affected by the global financial crisis, we are on track to resolve the Nigerian banking problems, or crisis, if you wish to call it that, without any fiscal or very little fiscal costs. And by that I mean that AMCON is taking most of the cost together with the central bank, and the banks themselves, especially the banks that are healthy at this point. Don't forget that we set up a banking sector stabilization cost sinking fund. And that means that the costs of that sinking fund over 10 years, 1 trillion naira, will be borne largely by the central bank and by Nigeria's banks, which volunteered to contribute every year 0.3% of their total assets. And so this is a very unique approach. Nigeria is the perhaps the only country in the world that is able to resolve the banking crisis without resort to spending huge amounts from the national treasury. That's the first aspect of my answer. The second aspect is that, yes, it has all been very worth it. The 8 banks in which the central bank intervened have deposits of almost 4 trillion naira. So what would be the alternative scenario? It's too difficult to contemplate. And so, of course, it has been very much worth it in terms of ensuring there is stability and that banking services in Nigeria, which is Africa's, sub-Saharan Africa's second largest economy, are not disrupted. So it's very much worth it.
Let's turn our attention away from what the CBN has done and what is expected of some of the rescued banks and other financiers within the system. Some of the reforms you've introduced are a new system of capital adequacy ratios to ensure that banks, before they lend, actually have the liquidity within the system. Moving away from the mainstream commercial banks, there is a problem, it seems, with microfinance institutions, where already over 224 of those microlenders have had their licenses revoked due to their inability to meet some of these capital adequacy requirements. So you've got commercial banks, mainstream, having to undergo one process, and then you've got microlenders on the other side that seem to be working against the broader imperative. How are you resolving that?
Well, that process is also being resolved as well. Microfinance in Nigeria is relatively a new phenomenon. It started just about 5 years ago. So it's not unnatural if there are problems. A number of microfinance operators did not understand the real model of microfinance lending. And so they went into business thinking they were smaller versions of commercial banks and began to have problems of capital adequacy, risk management, and corporate governance. And we have intervened, not as systemically as we intervened with the commercial banks, but we did indeed revoke the licenses of a number of microfinance banks. Now, what happened when we took that action was that it made all the microfinance banks in Nigeria to sit up and begin to take a second look at themselves and at their operations. And combining that with a lot of training that we're giving to microfinance operators and adjustments to microfinance policy, which we've just issued, we expect that over the next few years, microfinance lending in Nigeria will be what it ought to be.
Dr. Moghalu, final question, and it's a macroeconomic question. Those who look at the Nigerian economy say absolutely it will grow well for as long as oil prices do well. But what's actually needed is to make the economy productive outside of oil. And this is where we're having a few challenges, because the banks are now loath to lend in general because of events that we've seen over the last 2 years. And yet where the money and the financing is needed is within, for instance, agriculture, manufacturing, some of those elements of the real economy that could propel growth. What's being done by way of trying to encourage lending into the real economy, broadly speaking, and de-risking lending in these areas, because ultimately that's what's going to define financial stability in Nigeria?
We believe so very much, and that has been a very strong focus of the central bank. Don't forget that Nigeria's banking reforms rest on 4 pillars. The first is to enhance the quality of banks. The second is to establish financial stability. The third is to evolve a healthy financial system. And the fourth is to ensure that Nigeria's banks begin to lend to the real economy. So we have taken a number of initiatives. We've just announced a new initiative called the Nigerian incentive-based risk-sharing agricultural lending, in which we will set up some seed fund that will get the banks to leverage that sum of money and massively increase lending to agriculture and de-risk lending to agriculture by creating incentives and risk sharing. So the central bank has focused very heavily on this whole issue of the real economy, because as a central bank of a developing country, we believe our economy has no future if the real economy is not developed. We are working very hard on the side of the government. The president of Nigeria has just made a pronouncement yesterday or 2 days ago, I believe, that has made it very clear that he is going to steer his government in the direction of establishing a productive economy in Nigeria. And that shows that all the economic planners are pulling in the same direction.